Hey everyone, Dan here. Today we're going to look at how to use the RSI indicator in your trading activity. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And the other thing is that about 10% or so of the people who watch these videos are subscribed. And so if you do watch these videos a lot, or if you are catching this one for the first time and you enjoy it, I would really appreciate the subscribe. It means a lot. This is still a very young channel. We have a lot of work to do, but your likes and subscribes help spread the word. And while we're on it, spreading the word, if you have a Reddit, or you have a Twitter, or you have a Facebook, or anywhere else that you share things online, please feel free to snatch any of these video links and share them there. That also helps a ton. Okay, so let's talk about RSI. So RSI is an indicator that basically acts as a momentum oscillator that takes into account the speed and change of price activity. And so you can see it right down here. And let me just kind of lay the framework for what you're seeing. So the blue line is obviously what the RSI is at on any given point on this graph. And the yellow line up here indicates 70. And the yellow line down here indicates 30. And that's because the developer of this indicator basically said that a stock is considered overbought when it reaches over 70, and that it is to be considered oversold when it dips below 30. So those are the main points that we're going to pay attention to in this video. And RSI indicators will help you with things like keeping yourself from chasing. So if you are in the habit of say you were watching the price action when it was here today and it went up and you're like, ooh, I should catch this. And then it came back down. You're like, okay, hold on. And then you're like, ooh, I should catch this. And you're like, oh, hold on. And then you're like, ooh, I should catch this. Oh, hold on. And then it's kept going up, and you're like, okay, I gotta buy in. And so you buy in right here. That's called chasing, because you sort of balked a whole bunch of times when you could have bought in. And then by the time you did buy in, you were picking it up pretty late in the game. So you would have been probably a pretty sad camper if you had bought in right around here after watching all this run up happen. And then, you would have thought that you were in pretty good shape, and you'd been a little bit concerned, and then you'd be like, okay, maybe we're recovering, and then this probably would have made you panic sell. So if that sort of sounds familiar to you, then the RSI might be able to help you a lot. So for me, the RSI helps when I'm sort of coupling it with other types of indicators. So let me give you an example. So say I was watching this right now, and I sort of saw a channel forming here. And I wanted to say, okay, so it looks like we have a bit of a channel forming here that captures, 90 or more percent of the price activity, lies within these bounds. And I wanted to say, okay, so this is sort of in the lower half of the channel right now, so that might be a good dip buying opportunity, right? Well, a good double check on that, and let's just draw a box. And this is happening in real time, so I don't know what's going to happen. Let's draw a box and basically say, okay, so right here, we're wondering, should we buy? Because it's sort of in the lower half of the channel, and it might be pushing upward, or so it looks. We look down here, the RSI is currently at 66.74. So it's very close to 70, which is considered overbought, which means that too many people have bought in too quickly, and that it's likely to sell off a bit in order to get back into the range between 30 and 70. And on the opposite end of the spectrum, if something is being sold off, let's look right here, for example, and it gets sold off too much, it's considered oversold, meaning it's too cheap for what it should currently be trading at, as considered by the indicator anyway. And so likely people are going to start snatching up this stock at this point and drive it back to be between the 30 and 70 mark on the indicator. So if it were me and I were considering this, I would say, okay, so 60s is too rich for my blood, essentially. And so to me, if I were considering the channel, plus the RSI, I would not take a position right now because I would assume that it's going to pull back a bit, maybe toward the midpoint, or even dip down closer to 30. So let's let it play out while we talk through some other things, and then we'll check in on it before we end the video. So another thing to consider, when you are looking for patterns that you can play off of, a good thing to do, so we look here, we see that the RSI was 29.45, so it was considered oversold at this point. And so that would have been, if we are just going off of that, a good dip buying opportunity, okay, right there. And we saw that played out really well. Ooh, that's just really hard to see. So let's just make it bigger, but we'll know that it's sort of the leftmost side of that box is what we're talking about. And then if we would have ridden the price strength up and then would have sold out when it hit over bought, sorry, this stupid drawing thing is a pain sometimes. Would have sold out right here, okay? And so that would have basically given us a selling out at 83.16. It would have bought in at 82.44. But I mean, so that's almost $1 per share movement in what? From 10.54 to 11.34. So what's that, 40 minutes? $1 per share. And that would have just, at that point, the channel wouldn't have even been formed. So you would have just been basing it off of buying when it was oversold and selling when it was overbought. Now, that can be sort of like a really zero-sum kind of strategy, meaning if your RSI doesn't hold up, you have no other indicators to lean on to say, oh, okay, I think I might understand what's happening and be able to adjust my strategy this way or that way. So that's why I wouldn't just go based on the RSI. Also, some stocks are much more apt to follow these RSI rules, if we want to call them that, of the 70 and 30 than other stocks. So just scroll back in time and look at a time frame that you would be looking at when you'd be trying to trade it. Meaning, if you often look at the 1 minute when you're making trades, look at the 1 minute, go back in history, see what happened when the RSI was oversold, see what happened when it was overbought. Did the stock seem to react and respond to the levels in the way that you would want them to if you were using them as buy and sell signals? If you trade longer term and you look at, the hour or even the daily to do your trading, then just do it that way. Flip it to the hour to the daily. The RSI will still be there. It'll adjust accordingly. And you can see, same idea. When is it overbought? When is it oversold? Would those have been good times to buy and sell if I was looking at it in real time? So that's, one simple thing. Buying when it's oversold, selling when it's overbought. Now, to me, like I said, I would couple it with something else. Right now, we're coupling it with a channel play. And so here I'd be looking for, okay, when it's reaching toward the bottom of the channel, these would typically be my dip buy zones, right? The way that we play a channel is when the when the stock price is toward the bottom of the channel, we buy it, assuming that it's a dip, and then it's going to bounce off the bottom bound of the channel. And when it is at the top of the channel, we take those as selling indicators, assuming that it's going to bounce down off of the upper bound of the channel. So that's the channel strategy. So if I couple that with the RSI strategy, here I would have said, ooh, this looks like a good opportunity to buy because it's toward the bottom of the channel. I would have looked down on my RSI. It's at 32. Yep, that seems pretty solid, pretty close to 30. So if anything, I would have assumed maybe it's going to dip a little bit further, which, I guess it was at 28, right here around the same point. So, maybe it's going to dip a little bit lower, but 32 is close enough to 30, and so I'd feel comfortable taking a position there. And then, if you had been riding the channel and then you didn't sell out until, say, it got toward the top here, here you might have looked, okay, it's toward the top of my channel. It is 67.95 on the RSI. Yep, that's pretty close to 70. I think that's probably a good opportunity to sell out. So you would have rode that price from about, say, 82.88 up until about 83.42. So what, about 55, 60 cents a share, something like that. But again, just over a short period of time. That's just after 1 o'clock, and this is just after 12 o'clock. So in less than an hour, you would be making that trade. But like I said, you can just draw out any of these time frames. So, if you're thinking that you're going to trade at the 5-minute or the 30-minute chart, something like that, like the same things will still apply. You'll just be looking at a different time frame, but the same strategy that we're talking about still applies to there. I just use the 1 minute because since we're doing it during market hours, we can see things change faster and we can capture them in the course of a short video like this. Okay, so let's say you weren't watching, say you weren't watching the stock price until this happened. Okay, so you saw the channel forming, so you drew in your channel and you were like, oh cool, there's a channel here. And then you watched the price drop down here and you said, ooh, that's toward the bottom of the channel. And you look down, your RSI is at 30.85. And you say, ooh, bottom of the channel. It's been bouncing off the channel since it started holding it. And so I'm going to sort of, my risk to reward ratio seems to be on my side at the moment. So I'm going to take a position because it's toward the bottom of the channel. It's at 30 on the RSI, and I'm going to sort of see if it bounces off the bottom of this channel. So pretty quickly, you get a bounce, you ride it up, and then here you probably start to think, ooh, this is getting close to the top of the channel. So maybe you sell out here. Because it is overbought. It's over 70 at this point. Or maybe you sort of say, okay, I'll wait to see what happens on the next little dip. And so then there's a little dip, and then it pushes up toward the actual upper bound of the channel and gets you into overbought territory again. And then maybe that, it gets you a few extra pennies, but it's not, the most important thing was you caught the bulk of this action, not that you held out to make this little profit. Be careful of doing that too. When you already catch a really good run, don't get so greedy that you're like, well, I'm going to wait till it gets to the top of the channel, because this is very close to the top of the channel. It's already overbought. And so this might be a good time to say, I'm going to stick to my plan and I'm going to sell out here and take my profit. All right, let's catch up with what we had plotted before. So remember, when we did this one toward the beginning of the video. So I said I wouldn't take a position there because it was overbought almost, even though it was sort of in the lower half of the channel. That's proven out to go pretty well. What I would say is now I'd feel pretty comfortable taking a position. That RSI is 34, and it's toward the bottom of the channel. Now the RSI just dipped down to 30.51. So I would take a position on this one, even though it's falling out of the channel a little bit, like anywhere in like this range, I would be pretty solid with. It's okay if it falls out of the channel a little bit because it can always pop back in, like it did that here, right? And here it jumped out of the channel and fell back in. So a little price activity outside of the channel is a-okay. And that's where something like a secondary trend or pattern or indicator to follow helps. So we have sort of the trend indicator, which is the channel, and then we have the strength indicator, which is the RSI, to give us secondary information. So let's see what happens if this can bounce off of this 30 level here. So basically that green means, this would be a buy opportunity for me. What I would say, since we're here anyway, what I would chart if this were me is I would keep probably my stop loss here if I wanted to be very conservative, meaning have a very tight stop loss. I would go there. If it fell below there and I didn't want to keep as tight of a stop loss because maybe I'm interested in averaging down or I just have high conviction in this play for some reason, though be very careful with just having conviction for no great reason. I would go maybe down here would be my other possible spot for a secondary, or I guess a lower stop loss if you wanted to take it there. So now that we're at 27, is that what it's at right now? It's at 27.91. Being that AMD often follows the overbought, oversold unless there's like major catalysts in news, obviously, that has everyone buying or everyone selling, then you can kind of chuck these indicators out the window to a big degree. You can chuck most of TA out the window for that matter. But, it usually sticks pretty well to the RSI 30-70 rule. Some folks I know set theirs up at 80-20 just because they want to give themselves a little bit more wiggle room. I don't know if that would have helped you at all today, actually. Let me see. This was like a high point back here, and this was at 80, so that would have hit, but nothing else even hit 80, and I don't know that anything hit 20 at all. No, not today. So a couple of things about AMD if you're not familiar with it. I've played AMD a lot. It's a frequent channel former. It forms the channel and sticks to it. And then it's pretty obvious usually when it breaks it. And then it also commonly follows the RSI 30-70 rule pretty to the T. So we'll see. It's coming back into the channel a little bit now. So we'll see what happens. Let's go back in time a little bit since we're here and sort of see what happened yesterday. So ignore these purple lines because these are nothing. But let's say if you were just going off of the RSI indicator and you wanted to buy when it was oversold. Okay, so let's say here you would have seen it at all the way down to 20. So let's say you would have bought here. And let's make this green because that's where you're going to buy. And then you're going to sell out when it gets overbought. And if you were really strict, it did hit 71 there, so you would have sold out there. Where was it? 71, okay. So right in this area, so let's put the red, indicating that you sold. So you would have just ridden that, just based off of the RSI, you would have ridden that from about, let's say you got 80, 50 until about 81.72, so over $1.20, and that was $1.20 per share just in the matter of 9:37, so less than a half hour. So that is a pretty good return, especially if you're playing options. That would have been a really great return. That would have basically gotten you whatever the delta was on the option. Speaking of options, if you play them, you can obviously run this in the other direction and do it put style. So when you see something is overbought on the RSI, you could say, I'm going to buy my put when this gets above 70. So you would have bought it right around here. So turn that green. And you would have sold your put when it got oversold, assuming that people are going to pick up cheap shares. So you would have sold it there. So let's say that would have netted you 82.29 down to 81.54. Okay, so not quite as much of a change, but still relatively close to $1. But this might be even a shorter time frame. This is about 11:16 to about 25 minutes. You would have netted that. So really good for intraday trading if you're able to do that, if you have day trades or if you have an account that's not subject to PDT. The other one would be if you do trade in a longer time frame, like on the hour, the 2 hour, the daily, and you do swing trading, you can deploy the same exact strategy as I'm talking about. It'll just play out over the course of several days instead of like minute by minute like we're looking at here. Let's see what happened with this big run. So you would have maybe bought in here when it hit 31.18, depending on how strict or how loose you are. So 31.18, you would have, if you're strict, you would have sold out there. 31.18. I'm talking about the RSI, but the price there was, say you bought it in at about 81.71 and then sold out at about 82.06. So a little bit of a change. Some folks do a slightly different variation of this, which they don't do the first wave, but they do the second wave, meaning they buy in after a first wave over 70 has occurred, if it holds above the midline. So the midline is 50, right? So you'd have to be looking like here at the midline of 50. And so here you see a push over 70, and then it dips down below 70. And so you're going to say, does it hold 50? And if it recovers and bounces off of 50 or doesn't come down to 50 and starts coming back up again, some folks buy that second wave and then ride the second wave all the way up until it starts to come back down below the 70 again. So, in that sort of a strategy, that could have caused you to buy in maybe around here and then sell out maybe around here. So that would have allowed you to catch much of this move. It's a little bit more of an advanced strategy. Maybe we'll cover it in depth in another video, but just thought I would mention it in case all of this is making a ton of sense to you and you want to just kind of deploy these things and try them out on your own time later. All right, so here's where we are. So if we had bought in here, we would have took a little bit of a dip. It wouldn't have hit our cut loss. I set that cut loss there because of all of this resistance in this most recent price activity. Also lines up with some resistance back here as well. And so it wouldn't have hit my cut loss, and now we'd be pushing back up into the channel. So at this moment, I'd be getting to become a happy camper, whereas I would have been a little bit concerned at first. But you see the RSI is inching up here. I'm not going to just kill more time to see how the rest of this plays out. Hopefully this kind of proves the point. And yeah, I guess if you have any questions or if this was confusing or you weren't sure how to incorporate this into your trading, let me know in the comments below. I look at the comments every weekend, so just know it might take me a few days to get back. But otherwise, I hope this was informative. I hope it helps you not chase, and I hope that it helps you find good exit points so that you don't hold things past the point of, logic. Allows you to lock in some profit before you just lose it all. Okay, well, thanks for watching. Share away. Subscribe if you haven't yet. And I will see you all in the next video.